Why are gold and gold stocks going down? I thought they were supposed to be a safe haven. So things seem to be playing out quite similarly to 2008. If you were not around back then, what happened was gold was above 1,000 and gold sold off below 1,000. Gold stocks got hammered, and then the Fed came in with massive amounts of QE, and the accounting rules changed. And within about 18 months after gold prices, silver prices, and the mining shares crashed, 18 months later, some of these mining shares were up enormously, and the gold price after it crashed was at $1,900 an ounce by September 2011 before the paper price smashes knocked it back down into a bear market for over 7 years. So, as you can see here on your screen, this tweet by Simon Mikhailovich exemplifies one of the main reasons why. I also listed other reasons below in red there. If you're not familiar with Simon Mikhailovich, he is a professional money manager. He's worked in finance for decades. I've interviewed him in the past in the archives on my channel. He's a hedge fund manager, and he also started a physical gold storage fund. So he would know. He has a lot of good contacts in the industry. He's been on Real Vision TV, many other podcasts. Really smart guy. He also escaped, I believe, Soviet Russia. Anyways, the three main reasons why gold and gold stocks are going down, in my opinion. Number one, extreme risk off from managed money or professional money managers. And I've talked about this now for weeks. Also for my Patreon account contributors, what I mean by extreme risk off is a lot of professional money managers are going to cash, they're going to US treasuries, and they're going to physical gold or things like the GLD, the Sprott Physical Gold Trust, not gold stocks. And so in the short term, these things are being unfairly dumped. And once these things are being unfairly dumped, there's a trend downward, and then that creates some of the other problems on the list here. So number two, as you can see here on the tweet from Simon Mikhailovich, he's talking about his contacts, how these people are getting massive amounts of margin calls. If you do not know what a margin call is, I will put the definition, the link to the definition from Investopedia, which is the best beginner's website to look up definitions. A margin call occurs when the value of an investor's margin account, that is one that contains securities bought with borrowed money, falls below the broker's required amount. A margin call is the broker's demand that an investor deposit additional money or securities so that the account is brought up to the minimum value known as the maintenance margin. A margin call usually means that one or more of the securities held in the margin account has decreased in value below a certain point. The investor must either deposit more money in the account or sell some of the assets held in the account. In this case, what is being sold is gold-related things. So gold stocks that were profitable, like Sandstorm Gold, which is a very good company making very good free cash flow and margins, even at current gold prices, even though gold has corrected. Or regular gold exposure, perhaps. Maybe some people don't even want to hold GLD or the other paper gold instruments. They want physical gold or cash or treasuries. So once these margin calls happen, people are selling assets they do not want to sell. They do not want to sell their gold. They do not want to sell their gold stocks that are making them money. However, they have other bad trades, other bad investments that they stupidly over-leveraged, and those trades could bankrupt them or cause enormous losses. If they're a hedge fund and they have losses, they could have all their investors withdraw other problems. So when there's margin calls, people normally sell something that's profitable to cover losses. So large margin calls. And then when you add up the other two things there, you start to the trend on the price charts, the downward trend, the high frequency trading algorithms, and the professional trend traders, who are either hedge fund managers or professional traders, notice these patterns, pattern recognition, especially the high frequency trading algorithms, which have very quick pattern recognition, and then they just pile on. So this is becoming a vicious cycle here, a downward loop, and that's what is happening. So over time, in the near future, this will probably change. Don't know the exact time frame. Do not buy all of your gold shares at once. If you were in the accumulation mode and you didn't get enough physical gold or silver, or you're looking at the best gold mining stocks or the best silver mining stocks with the lowest cost, the best balance sheets without debt, or some of those precious metal royalty and streaming companies that don't have margin problems, don't over leverage their balance sheets, then this might be the time to go and look at some of the bargains. But again, I repeat, do not buy all of your share positions at once. That is the main mistake. We don't know how low everything's going to go, But 18 months from now, 2 years from now, after the Fed does even more stupid things, maybe currency swaps or something else, the gold stocks and the price of gold could be a lot higher. And let's face it, the odds are very, very high that the Federal Reserve and the other central banks are going to do something very, very stupid, even more than now, in the near future.